Welcome back to our weekly update. I'm Charlotte McLeod with the Investing News Network, and I'm here to give you a quick look at our top stories for the week. The gold price briefly broke the 2,000 per ounce mark this week as investors looking for a safe haven gravitated towards the yellow metal. Gold has only passed this key level a couple of times in the past. First in July 2020 amid global COVID-19 pressures, and next in February 2022 on the back of Russia's invasion of Ukraine. This week's rise came as market turmoil continued after the collapse of Silicon Valley Bank and Signature Bank. Switzerland-based Credit Suisse was also in the headlines after news hit that it will be bought by rival UBS in a deal worth $3.25 billion. Meanwhile, back in the US, First Republic Bank appears to have narrowly avoided a similar fate after a group of Wall Street banks banded together to contribute $30 billion in deposits. Many of the experts we speak with at INN have been saying for months that the US Federal Reserve's aggressive rate hikes may break something, and I asked Will Rind of Granite Shares if we've reached that moment. His answer was yes, absolutely, and he thinks it's perfectly natural that gold has responded in the way that it has. As Will explained, there's nothing that influences gold more than fear, and what we've seen this week is fear. He added that gold is not going to do a Silicon Valley Bank on you. The other key event investors were watching this week was the Fed's meeting, which ran from March 21st to 22nd. Prior to the recent banking problems, a hike of 25 basis points was widely expected, with some market participants even looking for a 50 basis point increase. A 25 basis point boost still looked possible after those issues came to the fore, but some experts were calling for a pause or even a cut. Ultimately, the Fed opted for a 25 basis point rate hike, saying that it remains committed to its 2% target for inflation. The Fed also indicated that it sees the US banking system as sound and resilient, echoing recent comments from Treasury Secretary and former Fed Chair Janet Yellen, who said the US banking system is stabilizing. This situation is still unfolding, so stay tuned as we speak with experts about what the Fed's actions mean for the general markets and, of course, for gold. That's all for this week. If you like this video, make sure you subscribe to our channel and turn on notifications so you don't miss future updates and interviews. You can also follow us on social media or click below for our report or any article mentioned in this video. We'll see you next time.